what are LPs thinking right now? Are they looking at this world and saying, I should just be all in cash? Or are they saying, yeah, everybody thinks we should all be in cash. Therefore, there's not going to be enough money in private. Therefore, there's an opportunity there. We know the 6.5% rate, that's not going to be here forever. It may be here for a little while, but we need to keep investing in venture. Or are they just cutthroat about it? Like, let's pause venture investing, private market investing.
It's a great question. First, when I look at the 3-year Treasury bill, it's like 4.7. Not to quibble here. So I think Chamath's getting a little goosey on his 6.5. But the fact of the matter is,
what does that mean? Goosey.
I know, you get a little extra because you're super special. You're VIP, JP Morgan.
Oh.
Maybe it was like some sort of like bond rate that included corporates or something. Maybe it was.
I'm getting like 5.2 from Robinhood on my Robinhood account for J trading. So it's right.
What is in that? What is in that, Jason? They probably got it in some junk bonds and they're ripping you off.
Whatever it is, I'm getting 5 points. It sounds pretty good to me.
Until you're not. You are until you're not.
It's a 100% T-bill, parentheses, and junk bond fund. Look at the fine print, Jacob.
LPs have a 10-year view. They understand, like most people. Listen, if you look out at the 10-year, the reason the 10-year is, that we have real interest rates at about 1.5%. So that's the 10-year less expected inflation when you look out, is because people expect inflation to come down and they expect rates to come down. So if you were an LP and you said, I'm not going to invest in venture in the next 2 vintages, which may be the best 2 vintages we've seen in a long time because prices are adjusting, et cetera, and I'm going to move it all into some rate bet. First, it's just very difficult to do. They don't move their allocations around that quickly. Now, a wealthy family as an LP could move their allocations around really quickly. But if you're Texas or you're Ohio or you're a sovereign wealth fund, you're betting on the arc of value creation. I would say this, the consequence is they're narrowing their aperture as to the venture funds they want to allocate capital to.
Okay, explain that. Unpack who they're narrowing the aperture to.
We've talked a lot on this pod about the power law. And the truth of the matter is, whether we're talking about AI or software or anything else that people are going to be funding, it's 10% of the investments that are going to yield 90% of the returns. And so they're looking at that and saying, who are the top 10 firms in Silicon Valley? I either want to get allocation to those firms who are seeing the best deals, converting the best deals, and are selective, like Sachs talked about, or we just don't want to allocate. And so I think, what we saw over the last 2 years, Jason, was an explosion of new funds, an explosion of new, first-time, second-time funds. I think subscale, small funds with no DPI, they're going to find a really, really tough time, to Chamath's point about DPI raising capital. And you're going to see the scale player scale.